This is Chase McWhorter, Managing Director with IREI. We're continuing our series focused on asset management. Today, we're joined by Martha Kelley over at Bain Real Estate. So, Martha, obviously, thank you for taking the time today to share your thoughts. If you want to give just kind of a brief introduction on yourself, Bain, and then we'll jump into the questions.
Sure thing. Thanks, Chase. And thank you, IREI, for having me. So my name is Martha Kelley, and I'm a managing director on the real estate team at Bain Capital. I run our retail and housing strategies. Today, I think we're focused on retail, and so at a high level, we buy, grocery-anchored open-air retail centers alongside of a partner called 11 North Partners. They're our co-owned operating platform in the retail space. And we buy these for two buckets of capital. We control a value add fund. And so we're investing out of a commingled value add fund, as well as a core plus vehicle that we've set up specifically to acquire open air grocery anchored retail.
Perfect. Well, again, kind of the same line of questions for other property types as we dig into this. So let's start with the basics. So, how do you define asset management?
Yeah, sure. I'll just take a step back. So at Bain Capital Real Estate, we really only invest in real estate where two things are true. One, we have to believe that there are strong secular demand drivers behind the real estate that we're buying. And then two, we have to have a clear operational edge in owning it.
Hmm.
And the second piece is really what makes asset management, central to how we generate returns. It's not just about the buy; it's about
Yeah.
how we asset manage and operate the assets. And it's really why we build platforms like 11 North, or we partner with operating platforms where sort of deep operational and asset management capabilities are the competitive advantage. Again, it's not just about sourcing the deals; it's about asset managing them.
Yeah.
And so, like your specific question, what is asset management? At its core, I would say it's owning the business plan and it's relentlessly driving asset level performance over time. And
Yeah.
so it's combining, strategy, execution, and constant decision making to maximize, NOI.
Yeah. Well, and even for further context, I mean, kind of the reason we wanted to do this series, and again, even starting with how do you define it, I think it's useful kind of for background. So, I mean, obviously, starting in 2010, rates going low, the way performance was, and then with COVID, and then rates starting to rise, we just saw tons of research that was from large real estate groups, even non, just talking about how they're going to refocus on asset management. And really, what we kind of set out was like, okay, well, how has that evolved? What does that mean to refocus on it? What were you doing before? So that's where we kind of took a really remedial view of like, okay, let's talk to all these experts like yourself and just go back to the basics because so many investors kind of had the same view of just, okay, what are we doing to improve NOI? Like what does the at the basic level, what are we actually doing to improve NOI as we're seeing values kind of be stuck? We're not seeing cap rate compression like we used to. So, I mean, I guess kind of teeing up the next question, what does the day-to-day look like from an asset management perspective?
Yeah, sure. And look, I think your point is exactly right. No one's getting saved by rates. The last cycle was all about compression. This cycle is all about, alpha generation through operations, through hands-on execution. So it's totally
Yeah.
right for you to be focusing on this at the moment. So day to day for an asset manager or from an asset management perspective, it's a role that sits squarely between ownership and operations. And so
Okay.
you're translating the strategy that the investment team has put on paper into execution. And for retail, that execution combines a lot of things. It's leasing, it's expense management, it's CapEx, it's financial oversight. But, to make it very tangible, right? I sit in an investing seat. We look at thousands, of acquisition
Yeah.
opportunities, but we're really looking at them on paper to start. And so you're taking a site plan and you're saying, okay, this is a grocery anchored center, and maybe there's a box tenant, and maybe we can cut it up when the lease expires and we can break it into four inline suites and we can maximize rent through that. Or maybe there's some capital projects that we see that will be, enhancing the center. Maybe there's some CAM reconciliation. Maybe we'll move from fixed CAM to triple nets. Maybe we will put in solar panels and EV charging stations. I mean, there's a lot of levers that we
Yeah.
underwrite. to drive value, but that's on paper and in the model, and you need an actual human to understand what that business plan is and then actually go execute and translate, what the model says. Okay, we're going to take, our going in yield from a 6 to an 8 at stabilization. That's great, and we can put that
Yeah.
on paper and we can have conviction in our underwriting based on our experience, but you need an actual human to drive that execution, and that's really what
Yeah.
that asset manager is doing. And so they're negotiating leases, they're shaping the tenant mix, they're controlling CAM expenses, they're ensuring CapEx projects are, getting delivered on time and on budget. It's really their job, and it's constant coordination across teams, proactive decision making. It's a critical role.
Yeah. Well, and one thing we've heard in kind of doing this series is a lot of times it was more siloed, or it became more siloed, that it was just, okay, do the acquisition, then hand it off to asset management. And it seems like more and more groups, and again, not saying people weren't doing this, but it it's being more integrated with whether it's asset management on the IC, whatever it might be. It's just it seems like it's becoming more integrated within the whole process. Like it's no longer you can just hand it off and say, okay, go work out this business plan. There has
Yeah,
to be
and
like a realistic,
that's
like, okay,
totally
what
true.
we can do.
That's totally true. And we can talk more about it, but I mean, I think you need to ensure that asset managers are in the room during the upfront underwriting so that
Hmm.
when you're setting rents and when you're talking about the business plan and coming up with all of the, crazy ideas we come up with when we're value add investors, that you have someone on the ground saying, okay, well, what's actually achievable, right? And
Yeah.
so absolutely. And I have lived through moments in time and at, different firms where there has been a bigger separation between the role of the function of asset management and the function of acquisitions. Here at Bain Capital, it's completely integrated. It's so integrated that in fact we set up operating businesses, with operational expertise and asset management expertise on the front end before we even go into a strategy. We are
Okay.
already, creating operational advantage through a platform that we control, to go effectuate, our strategies and our investment strategies.
Okay. Interesting. What would you say are some recent trends? Again, maybe going back to kind of when rates started to rise, any recent trends you could point to in asset management?
I mean, the most recent, we can't ignore it, is the rapid adoption of AI and
Yeah.
data tools, and we can, go into that, more if you'd like. But certainly that's a very recent trend, and everyone's using it again on the acquisition side and on the asset management side, and these tools are really powerful. Um, and then, some other tools specifically related or trends, sorry, specifically related to retail asset management is I think there's an acknowledgement in retail that the consumer experience and consumer engagement is critical.
Yeah.
In open air retail specifically, you're really trying to drive foot traffic and stay time and increase sales and cross selling and all of it is a flywheel of
Yeah.
tied back to the consumer experience. And so asset managers in retail specifically have to be focused on all the things that asset managers across a lot of asset classes are focused on. And then they're also focused on, well, how do we make this center a good consumer experience, right? That's not the case for an asset manager who's asset managing an office building necessarily. Sometimes it
Yeah.
is, but it definitely is the case for a retail asset manager to focus on how is a consumer engaging with the center. Are they staying for longer? Are they, not just going to the grocery store, but also going to the Starbucks and, three other stores. And so that's a focus. And then candidly, ESG continues to be a focus, particularly amongst our LPs. I mentioned we have a Core Plus vehicle set up specifically for investing in open air retail. And we do have a genuine focus on ESG. It makes its way into all of our business plans. ESG and operational efficiency. I mean, I think they're related, but that is a focus.
Okay. Well, yeah, and maybe dig in a little bit further on technology. I mean, AI is kind of getting a lot of the airtime right now.
Yeah.
And I think one thing we hear is, again, similar to kind of the very remedial define asset management. I mean, how would you say, what's the role technology is playing in asset management? Is it AI being used in the underwriting? Is it looking at leases? I mean, where are you seeing, I guess, the most impact right now with technology?
Yeah, I mean it's a force multiplier across all functions, I would say. And since this panel is focused on asset management, I'll go there. Although
Yeah.
And actually maybe I'll pull back and start at some of the data tools we've built just to make it
Yeah.
tangible for everyone. So we have two specific tools that we've built for retail. One we used AI and Claude Code, and one we didn't, but I'll talk about both. So we have built a tool. We have a data scientist in-house on our real estate team. He's not just focused on retail; he focuses on all asset classes. He knows how to code, but he also, knows the power of Claude Code and some of these tools that have come out. And so he has built us alongside of his little agents running around doing things. Basically, what we call a site scoring map. And so he's taken the US, he's broken it down into quarter mile by quarter mile hexagonal grids, overlaid a myriad of data points, call it 20-ish plus or minus of data points specifically related to retail performance. So, metrics that we think correlate to outperformance of retail centers. That's anything from demographics, so, daytime population density, household incomes, population growth. There's things related to tenant sales performance, foot traffic, dwell time, a lot of metrics. I mean, I don't want to give away the special sauce,
Yeah.
but he's pulled that all together, and we've built a model to rank them, and then come up with an aggregate score so that you can put in, or I as a non coder can
Yeah.
go in and put in a longitudinal and latitudinal coordinates into the machine, and 2 seconds later it spits out, it's a whole dashboard, but it spits out a score basically to tell me how good is this center, on a blended score across the US average, for retail. And
Wow.
so, we've done that. That project would have taken him 6 months before Claude
Yeah.
Code. And it took him, 4 to 6 weeks. And that was 3 months ago. And, now with the advancement of the tools, it probably would have been even shorter if we had started today. So that's one tool we use. That's a little bit more used on the front end of,
Yeah.
sourcing acquisitions where we find, an OM comes in and we quickly want to say, okay, is this worth spending any time whatsoever? We'll run it through the model. And then we have another tool we built before vibe coding was a thing, last year, where we took about 500 to 700 tenants. Now these would be household names that you would know, and we've scored them. And obviously there's credit scores and there's metrics out there that the public can find on companies. But between our consumer private equity business, which invests in retail businesses, right, and has either owned or done diligence on, or has some sort of a proprietary sort of view on a lot of these, and 11 North, our operating partner who's been leasing to these tenants for 25 years, we've developed what we call sort of our proprietary score. And it's not just what their credit rating is, it's what's the health of the business, how relevant is their product to the consumer, are they growing or are they shrinking, how quickly are they growing, what are their box economics, and really just like what's the health of this business as a
Yeah.
tenant in our center. And so between the site selection tool and the tenant scoring tool, we can very quickly, within a series of minutes or an hour, call it, evaluate any deal in the US and say, okay, like how good is the site? How good are the tenants? And then we overlay that with, okay, well, is it mispriced, right? If someone's marketing it, is the public misunderstanding that this is a super high quality center with a great site score? Maybe it's in an underlooked market, or maybe it has some noise with respect to a box turning over or something. But at the end of the day, we're seeing something underneath that, and that all of that is being done and made faster, of course, by the tools that we have.
Wow. No, that is very useful. Again, like to understand, because again, what we hear is kind of like, oh, it's helping with identifying a region to invest in, but to go into kind of that detail is very useful. So I appreciate that. Um, you kind of touched on consumer experience being obviously a main driver of retail. What else makes asset management in retail different from, say, other asset classes?
Yeah, sure. Look, I think it's I mean, and I've touched a lot of asset classes. Retail is genuinely more complex and more hands-on than a lot of other asset classes, because you're not just managing a building, you're curating this ecosystem that I talked about. You're curating sort of the tenant mix, the merchandising of a center that's keeping it relevant in the community, that's drawing people in. The tenant mix matters. How tenants interact with each other matters. Foot traffic, consumer behavior, dwell time, that all does impact the performance of the center. I mean, just juxtapose like a very simple example, an open air retail center that has 40 tenants. The who those tenants are and how they relate to each other really can impact the NOI performance of that asset. Whereas a 40 tenant office building, and I'm sitting here, at 54th and Madison, it's probably about 40 tenants in here, it does not matter whatsoever who's above me and who's below me.
Yeah.
To me as a user of this building, but candidly to the owner, it really shouldn't matter, other than of course there needs to be some credit and you need to have good lease terms, but the combination of tenants in an office building really is not important in the same way that the combination of tenants and the merchandising of tenants in a retail center is critically important. And
Yeah.
so that really that's the differentiator, I think. The other thing is, leasing is pretty constant. I mean, I mentioned 40 tenants. Typically, our centers have 100. And think about it, they're anywhere from, usually there's a grocery anchor. So that's the anchor, the large square footage. But then you'll have a series of 800 to 1,000 to 2,000 to 2,500 square foot inline tenants. And there's a lot of them. And they're on 5 to 10-year leases, but those leases are constantly rolling. And you're having renewal
Yeah.
conversations and you're having conversations with new tenants and there's capital improvement plans. And so the pace of it's really constant versus an office building where, your rent roll is a little bit slower to turn over, suites are bigger, the time to actually, the decision for an office tenant to relocate is potentially, a bigger decision than a small 800 square foot inline store. And
Yeah.
so, just the pace of that is slower. So those are the main differences. I mean, and then the other thing is this focus on an anchor, right? Because, particularly in grocery anchored centers or shadow anchored centers, like the anchor is the glue. It's
Yeah.
reason why it's the first reason why people are coming to the center. Now, getting the merchandising mix right keeps them there and gets them to spend more money and increases sales performance across the center. But the anchor is really the draw, and so getting that right, making sure that that tenant is healthy when you're going in, and then continues to be healthy and happy as you're asset managing. That's really important, and that's I think a little bit of a unique role of the asset manager for retail is to focus on the anchor.
Okay. Interesting. Um, Kind of started this with obviously we had our own kind of interest in digging into asset management more, but I also mentioned kind of we've gotten more, I guess, requests for information, more data insights from the investors, our readership, and even a further caveat. I mean, one thing that we've noticed over, I'd say, the last few years is kind of between our publications, interviews like this, a lot of times it's maybe the senior investment officers aware of these things. They're obviously in the day to day, but they're having to now position real estate against private equity and other things. So they're having to convince, say, trustees or people that maybe aren't as well versed when it comes to the nitty gritty of asset management. So, with that as kind of context, what insights do you have for investors about asset management and maybe what questions should they be asking during their due diligence that you don't see being asked?
Yeah. I mean, I think first and foremost, they should be asking whether asset management is in the room during underwriting. I mean, we talked about that
Okay.
before, but I think strong platforms bring in asset managers early. They integrate them with the acquisitions team. It's really one, I mean, there's no difference, right? We're one team. We did mention this earlier, but it's so that the assumptions going into the model are grounded in what's actually achievable. They're grounded in reality, not just like, okay, well, we think we can get $80 a foot. Well, you have an asset manager who's asset managing your existing portfolio saying, I don't think it's 80, I think it's 75. And oh, by the way, your TI needs to be 100, not
Yeah.
60. Right. And so,
Hmm.
and that really matters, of course, it's underwriting.
Yeah.
And so that's critical. I would say, also ask like how hands-on is the asset management team? And there's a few elements of this. There's their interaction with property management. So what's the strategy around property management? Because there's asset management and then there's property management. If it's third party, the asset manager is typically choosing the third party property manager and then managing them, holding them accountable. And so I think really understanding what the asset manager's strategy is for picking a PM, what their plan is for in interacting with the property manager, what's the cadence, how often during the week are they talking to them, what's the plan around property management. I say that because property managers, if they're not vertically integrated, they're service providers. They're excellent. We've worked with many excellent property managers. but they're not owners. And so they
Yeah.
really need someone from the ownership side, an asset manager, who, again, truly understands the business plan and the strategy and sees how all of the pieces are going to be pulled together across leasing and, capital improvement plans and all of that. They need to be driving the property manager to execute because, in the absence of, kind of being part of ownership and having alignment with ownership, a property manager is only as good as the direction
Yeah.
they're getting, right? And so understanding that critical leasing, same thing. It's really a very similar story there. You are either, you have an in-house leasing team and that's great, then they're integrated and a little bit more connected. Oftentimes you have third-party leasing brokers. And so understanding what the asset manager's plans are for hiring the leasing broker, who are they, what are their local relationships in the market, what's the cadence of interacting. I think both of those two things, diving deep on how they're thinking about that. And it's really all about ownership and accountability. You need an asset manager who feels ownership, who is accountable, and then who has plans vis-a-vis the sort of third-party service providers that we're hiring to really drive execution. That's
Yeah.
critical. Um, and then lastly, I would say transparency and really, I mean, reporting is a simple word for it, but really, like, how often are you going to be updated on asset level performance?
Mhm.
Again, having an asset manager who sits on the team, who's vertically integrated and deeply embedded in the team, allows you to basically have your hands on asset level performance, real time, right? Like we understand, we own a property, we own, hundreds of millions of dollars of retail assets, and I know what's going on at them every day, right? I have a good sense for, are we on track on this, on this asset? Maybe we're off track over here. Something's going on, and I have a good sense, even though I oversee a lot, I have a good sense of the day to day of what's going on across the portfolio because we have an asset management team who's really transparent about that and who's giving updates on, okay, this lease was signed, this lease we were below net effective rent on it, here over here we're outperforming, and so I get that, and it's great, and we can very quickly identify where things are maybe off track and then go fix them. And so if you're an investor and like you're trying to control performance, I think you really want to
Yeah.
understand how often am I going to be getting a look into what's happening because if things go wrong for too long, it's a lot harder to fix than if you're sort of seeing real time performance and able to quickly jump in and get it back on track.
Yeah, those are all really good points. One thing, again, through the course of these discussions, it keeps coming up is, and I think every firm obviously is different, but just the simple kind of view of almost how often are the asset management teams getting out into the field?
Yep.
That I feel like the last few years, it seems like more and more groups are like, you got to get out there. You can't just manage this from kind of your office or your cubicle. Like you've got to go get on site a lot more now. I
Yeah,
mean,
critical. Yeah, I think traveling is critical. I mean, you really miss if you're not on the ground, like things can change quickly, right? You could have
yeah,
an asset, that 3 months ago looked great, and all of a sudden, maybe your trash collection, you're having a problem there, and trash is piling up, and all of a sudden, something that looked really good, now just needs a fix, and it's not a hard
yeah,
fix because you replace your trash collection,
yeah,
service, or you get the property manager to focus on it, but like those small things can make a difference, and it really does require someone getting out there. I mean, we try to see all of our assets, I think probably once a month, or
okay,
every 2 months. Someone, right? We have a big team. I mean, we haven't spent too much time on this, but 11 North is our, as I said, is our operating platform. And between their team and our team, which are effectively an integrated retail business, one of us, an asset manager from 11 North, an asset manager here, an investor here, an investor there, one of us is getting out to the properties, on a pretty consistent basis.
yeah. Well, and another funny, I guess, recent trend that we've heard more, I guess, I don't know if it'd be psychologically, but the asset management people being like, finally, we're getting some credit. There's focus being put on what we're doing. We're not forgotten anymore.
Oh yeah. I mean, look, asset management quite often is the largest driver of outperformance.
Yeah,
You can get a good buy, like we can be right on the buy. We're of course, highly focused on the strategies, on the going in, what's the buy, what's our positioning going in. But really often it's outperformance is driven by good asset management on the ground. Otherwise, assets tend to drift towards the status quo. Uh,
yeah,
Without active asset management, and honestly, that's not our business. I mean, we're a value add real estate investor, and so we're
yeah.
acquiring assets and adding value to them over time, driving NOI growth over time. But that really requires active asset management. You cannot sit back. That will not happen without someone driving the execution.
Yeah. So what would you say are your expectations, kind of your outlook for asset management in the year ahead, maybe a few years ahead? Doesn't have to be necessarily like technology, but just kind of broadly. What are expectations? What are you guys seeing when it comes to this function?
Yeah, look, I mean, we're in a really volatile moment right now. The global macro economy is relentless and making
Yeah.
things complicated, um, which I think makes strong asset management even more valuable. I mean, you said this at the beginning. It's not about rate compression. No, cap rates
Yeah.
are not going to save people, and this global macro environment is just putting so much more emphasis and focus on the ground operations and fundamentals, and so I really do think that this is the era. This cycle is going to be the cycle of asset managers and of operational, focus on the operations and focus on
Yeah.
value creation through on the ground active asset management. Look, the dislocation I think also creates opportunities. Well capitalized investment managers like Bain Capital, particularly when they're partnered and vertically integrated with strong operating platforms. I think that combination of a deep capitalized investment manager with a strong operator, like that's really strong at the moment. And you do see other platforms going more towards the model of investing in platforms, buying them, building them, because they see that there's this really critical unlock of having the operational capabilities. Again, you have to get the strategy right. The secular demand drivers have to be there. You're picking your spots, but you also need execution advantage. And so I do see a lot of folks pivoting and focusing on getting access to platforms because people like me, we don't have the operational expertise in the way that our 11 North does, right? They've been in
Yeah.
retail investing and management for 20 plus years. I mean, we partner with the CEO of a publicly listed retail REIT, and he knows everything about retail. And so having him as a partner alongside of us is really, really critical. And I think you'll continue to see that as a trend going forward.
Yeah. Well, and it's funny, whether these conversations in our publication, our conferences, I would say, again, going back to when these reports first came out that started this, again, groups refocusing on asset management, more active asset management, all that. I would say the general mood is definitely more optimistic. And my ongoing theory is because it's rooted in that real estate people that focus on asset management, it's kind of this bottom up analysis. It's getting back to the real estate. It's no longer just macro level rates, things like that driving it. It's now, I think real estate people are like, no, this is what we've been doing. We
Yeah,
haven't
it's the fun.
stopped doing it.
I mean,
Yeah.
it's the fun stuff. It's really where it's very creative. It's really fun. It's active. It pulls. I mean, again, it's multidisciplinary, so it pulls a lot of folks
Yeah.
together, different disciplines. It's the fun stuff. It's really hard, and I totally agree with you. It's like getting back to the roots of real estate.
Yeah. Well, I appreciate you taking the time. No, this has been incredibly eye-opening. Love hearing more about, again, kind of the differences between all these property types to see and hear more about retail. Again, getting into the nitty-gritty. So I appreciate you taking the time and sharing this with us. And yeah, we look forward to having maybe a follow-up, maybe later in the year to see how things are actually evolving. So want to
Would love
thank you for
that.
your time.
Yeah, thank you so much. Appreciate it.
All right. Well, you have a good rest of your day.
You too.
Bye.